Hey, what's going on, guys? Just wanted to do a quick follow up to my last video. There was something I kind of should have emphasized a little bit more, and I threw it basically like right at the end. And I know everyone doesn't watch through the videos all the way, so I figured I'd just kind of follow up with this. But real quick, and then there's one other thing I want to jump to. Um, the Fintel data. If you saw it in the last video, thanks for watching all the way through. For the rest of you that probably didn't, if you look at the Fintel data, this is really kind of showing institutional ownership really jumping up. It's in the low 40s percent, low 41% basically right now for institutional shares, 100 and basically 23 million in institutional shares long, and value of about 370 million. But just looking at this little graph right here, you can really see just kind of in the last 6 months or so, a ton more attention on this stock, and then even a bigger spike in the last month or so. Especially at this price point, there's really minimal downside to a lot of institutional owners. So I thought this was pretty interesting just to see that as they're kind of in this beat down price point, based on where they're at and where they're signaling that they're going to go in the next year or two. You can really see some of these funds with big dollars behind them are kind of jumping into here. And I mentioned it on the last one, but the biggest owners are Vanguard and BlackRock. Vanguard's sitting at like 22 million shares. BlackRock's at about 24.5 million. So it's pretty good. I mean, there's a ton of data in here just to see what people are doing. A lot of these are just taken from the various filings and things for these companies. But there's tons of data in here you can go and kind of play around with and see kind of what's going on and what the institutional owners are doing. But the other thing I wanted to look at, stock price didn't really do much today, but there were some of the analysts. Most of them were maintaining guidance and reiterating in line to in line outperform. But Seaport upgraded from neutral to buy. Needham kept it as a buy. Needham tends to be pretty bullish. I think it's Laura Martin who typically covers Fubo, and she normally asks questions on their earnings calls. And Wedbush has a couple. They're just holding the outperform, which I think it was Wedbush a while back. They were pretty bullish or bearish on it. So it's, correct me if I'm wrong. I think it was Wedbush, but they've been pretty consistent with that outperform viewpoint on the stock. And kind of further to that point, I saw this article come out from, I guess, one of the analysts at Wedbush. What's his name? Michael Pachter. Really just kind of highlighting the potential upside, substantial upside, he calls it, among the battle between Disney, Fox, and Warner Brothers. And to me, I haven't really spoken too much on this. If you look at the Down Badly channel, Shaheen does a really good. I mean, he's an actual lawyer, so he kind of weighs in. I think it's like a 45-minute video or something. He really digs into it, going through all the different points. But just wanted to highlight. Where was it? So he basically said after years of increasing losses, 2023 was the inflection point where Fubo focused on optimizing per subscriber metrics on both a revenue and cost basis, reducing cash burn and inching towards profitability. Even with more modest subscriber growth expectations given the proposed Disney, Fox, Warner Brothers Discovery Sports bundle, we think Fubo can still reach profitability by 2025 as it guided. And that's the thing. I mean, they're trading. I mean, their revenue, they were 1.3, 1.4 billion on revenue, and they're trading at $550 million market cap. I mean, if they can really hit what they're trying to hit, and they kind of, I mentioned in the last video, they're really kind of sandbagging 2024 guidance. I think they're just trying to be overly conservative. They're really focusing on that profitability. So I think that is kind of the trade-off that they're expecting on the, trading off some of that top line growth with, hitting their profitability target for next year. But they're at the price they're at with what they're guiding, and that the fact that it's been like probably, I don't know, 5 or 6 quarters they've been reiterating this 2025 cash flow positive goal. It'll be pretty interesting, and I really think it really feels like Fubo really does have a case, and there's tons of upside. I personally think I'm obviously bullish on this stock, but it seems like they really have a case against against these big kind of legacy companies where they've essentially been overpaying for all this content for all these years, and I think it's going to be one of those things. Either the JV doesn't even go through, which would be great, but even then, if Fubo can reach better terms, with the content that they're buying from all these companies, that just accelerates. There could be, it could really get them, if they can collect some like damages on what they've been overpaying, that could really help their balance sheet. If they can negotiate better terms, things like that. There's a lot of different directions this stock can go in the face of this lawsuit. So it should be really interesting. I don't think anybody really knows how it'll play out. Sorry, my dog's coughing. There's a lot of different ways it could play out. Fubo's doing the right thing. They're really ramping up this ad revenue. That's going to be a huge part of it. They've had a couple price hikes. They're really, they're in the final stages of hitting this profitability. So, we'll continue to track that on a quarter-to-quarter basis. If they can retain customers a little bit better and have less of the kind of choppiness of the quarter-to-quarter churn, could really be interesting. But feel free to weigh in. If you haven't subscribed already, that's a huge help to the channel. If you like this video, if you like any of my content, even subscribe. If you hate what I'm doing, then unsubscribe after. I don't care. But thanks for watching. See ya.